You've seen it happen more times than you'd like to admit. You enter a trade, you've done your analysis, waited patiently, and finally you pull the trigger. But just minutes later, the market dips a little lower, takes your stop, and then, as if mocking you, it rockets in the exact direction you predicted. It's like the market was waiting for you specifically to exit before it made its move. You sit there, staring at the screen, wondering if there's some secret cabal watching your trades, laughing at your pain. But here's the uncomfortable truth: they are. Just not in the way you think. Most traders lose money right before the market moves their way, not because their analysis is wrong, but because their timing psychology is. The problem isn't in the chart, it's in how you interpret the waiting. Every small flicker against your position starts to feel like an attack. Every tick of red bleeds confidence. Your brain starts whispering, "Get out before it gets worse." And so, you exit. The market senses the collective sigh of relief from thousands of traders just like you, and that's when it moves. This isn't random. It's designed. The market isn't a game of logic. It's a game of extraction. It's built to take money from the impatient and give it to the disciplined. When you lose right before the move, you've just paid a tax, not to the market itself, but to those who understand how to manipulate your emotions better than you do. Think about what happens inside your head when you're in a trade that's barely red. You start counting imaginary profits you haven't made yet. You zoom in and out of charts, looking for confirmation. You convince yourself that you'll re-enter when it looks better. But that never happens, does it? Because by the time it looks better, the move is already halfway done, and your emotions have flipped from fear to regret. You're no longer trading the market, you're trading your state of mind. The reason you keep losing money right before the market moves your way is because you've been trained to respond to pain, not probability. The market feeds on your emotional thresholds. It knows that most retail traders place stops in predictable zones, just below obvious support, just above recent resistance, right where it makes sense. That's why price often hunts those levels first. It's not personal. It's business. Liquidity business. The market needs fuel to move, and your fear provides it. Imagine this. You're long on a setup that looks clean. A bullish engulfing candle off support. Momentum is aligning. Everything checks out. But before the breakout, the market dips. Just a bit, tagging your stop by a few points. You curse, exit, and watch the same candle close strong. What just happened is what professionals call a liquidity sweep. It's the market maker's way of collecting orders before the real move begins. The market always goes where the money is first, and that means your stop losses are the appetizer. But this goes deeper than manipulation. It's about human behavior in a system designed to weaponize it. You see, every losing trade before the move isn't just bad luck. It's evidence that you're playing on the wrong side of emotional logic. Most traders think they're playing a technical game, but in truth, they're in a psychological casino. The house doesn't win because it's smarter. It wins because it's patient. It waits for you to fold. The irony is that the move you are waiting for needs you to lose for it to happen. Your stop loss becomes part of the liquidity pool that pushes the market in the direction you expected. You lose so others can win, and those others aren't necessarily smarter. They're just still in the trade while you're not. That's why real traders don't just study charts, they study human reactions. They know that when everyone's scared, liquidity is forming. They know that when social media screams breakout, that's usually the end. And they know that the biggest moves often begin right after the majority have given up. The professional's patience is not emotional, it's mathematical. They know that if they simply let everyone else panic first, the path becomes clear. But this is hard for one reason: you've been conditioned to equate pain with danger. In trading, pain often precedes profit. That's the cruel paradox. The candle that makes you doubt your setup is usually the one flushing out weaker hands. The trick isn't to avoid discomfort, it's to interpret it correctly. The market is a mirror, and every fake-out, every premature stop-out is showing you exactly where your emotional limits lie. Most people never adjust those limits. They just move them farther away, thinking a wider stop or different strategy will solve it. It doesn't. The cycle repeats. The real fix starts with understanding that you can't control when the move happens, only how long you can survive before it does. The market rewards endurance, not prediction. Every failed trade, right before the move, is your training ground. It's not punishment, it's feedback. It's saying, you were right, but you weren't ready. Let's be honest. You don't lose because you're bad at analysis. You lose because you exit too early, too emotionally, too humanly. You want certainty before you risk discomfort. But certainty doesn't exist here. The market only offers opportunity disguised as pain. The people who make money are the ones who've learned to see through that disguise. If you look closely, the market follows a rhythm: expansion, contraction, deception, realization. You usually enter during contraction, right before expansion. But between those two phases lies deception, the phase where price behaves in ways that make you question everything. That's the shakeout. And if you're not mentally trained to recognize it, you'll always sell during it and watch the move unfold from the sidelines. Most traders are right in direction, but wrong in emotional timing. They expect the market to confirm their bias immediately, as if it owes them validation. But the market is built to do the opposite, to test conviction. It's not about being right. It's about staying right long enough for it to pay off. You can have a 40% win rate and still make money if you manage your reactions better than the crowd. Think of it like this. Every time you're about to quit, that's probably where professionals are starting to enter. They're not reacting to pain. They're anticipating your reaction to pain. They know that when you hit the sell button out of fear, your liquidity becomes their entry. It's a transfer of wealth through emotion. This is why your stop loss always feels perfectly hunted, because it is. But not by a person, by a system that thrives on predictability. And as long as you act predictably, you'll keep feeding it. The secret is to start thinking like the system, not like a participant inside it. Every chart pattern, every candle, every pullback is just a reflection of collective emotion. The market doesn't move because of your single trade. It moves because of the herd's behavior. And the herd always behaves the same way: optimistic at the top, terrified at the bottom, uncertain in the middle. The people who profit consistently are the ones who learn to invert that sequence emotionally. They buy when it feels disgusting, they hold when everyone else is screaming, and they sell when it finally feels safe. That's not luck, that's trained discomfort tolerance. You lose right before the market moves your way, because you haven't built that tolerance yet. You interpret every dip as danger instead of data. You mistake discomfort for a warning when in reality, it's a signal. The market speaks through pressure, through the moments that force you to question your conviction. That's when it's asking you, do you actually believe in what you just did, or were you just hoping it would work instantly? Most traders don't realize that. They think patience means waiting a few more minutes before giving up. True patience is holding your conviction while you're in pain, without needing instant reassurance from the chart. And this is where the psychology turns brutal. The market knows that human brains crave certainty. Every slight move against you triggers the need to act, to do something, close the trade, adjust the stop, reanalyze the setup. But action in the wrong emotional state is poison. You're not trading price anymore, you're trading discomfort. You start making moves, not because the market told you to, but because your brain couldn't handle silence. Let me give you an image that might stick. Imagine a coiled spring. Every pullback, every fakeout is the spring tightening. Most traders panic when they see it compress. They jump out just before it explodes. But professionals understand that pressure precedes release. They let the spring tighten because they know when it releases, it will do so violently and in their direction. That's why it feels like you're always a step too early. You're exiting at the precise moment when the spring is at its maximum potential. The reason this cycle feels so personal is because trading exposes you to yourself in a way few things do. It reveals your impatience, your insecurity, your ego. You might think you're trading a market, but you're actually trading your threshold for uncertainty. Every loss before a move is a record of that threshold being hit. Every premature exit is your brain saying, "I'd rather be wrong and safe than right and uncomfortable." But safety is an illusion. The real risk is not staying wrong, it's never learning to tolerate being right long enough. You see, professionals lose too. The difference is, they lose on purpose. They let the market take them out when it's proven them wrong, not when it's made them uncomfortable. There's a huge difference between the two. Most traders blur that line. They think a red candle means they're wrong. It doesn't. It just means you're in the part of the story that tests your belief. The only time you're truly wrong is when your reason for entering has been invalidated, not when it just hurts to watch. But here's the cruel twist. The market doesn't show invalidation cleanly. It disguises it behind noise, behind false breakouts, behind spikes engineered to trigger emotion. It knows that most traders don't define wrong clearly enough, so it exploits that ambiguity. You lose right before the move because your definition of wrong is emotional, not structural. You close trades that were still valid, simply because they felt invalid. The most dangerous line a trader can cross is the one between analytical decision-making and emotional survival. The moment your decision is about relief, about escaping tension, you've lost. Because the market thrives on that very relief. It's designed to exhaust you until you give in. That's why people who are right often make no money. They run out of emotional stamina just before the payoff. Think of how many times you've said, "If I had just held a little longer." That sentence is the graveyard of 90% of traders. You're not missing technical knowledge, you're missing emotional endurance. You're not competing against algorithms or hedge funds, you're competing against your own nervous system. The professional's edge isn't just strategy. It's the ability to stay calm when everyone else seeks escape. They train themselves to act the opposite of how they feel. When the market dips against them, they don't flinch. They analyze whether that dip changes the underlying reason for their entry. If it doesn't, they hold. When it spikes in their favor, they don't immediately feel euphoric. They calculate where the next trap might be. They view every move, not through hope or fear, but through structure and behavior. They've detached identity from outcome. Their self-worth isn't tied to the last trade, and that gives them power. The emotional trader lives inside every candle. The professional lives above them, watching the pattern play out like a movie they've already seen. They don't predict what happens next. They observe who's about to panic and profit from it, because they know every breakout needs buyers, and every reversal needs trapped ones. Your pain creates their opportunity. That's the harsh equilibrium of markets. Now ask yourself, how many of your losses were truly because you misread the chart, and how many were because you couldn't emotionally endure the setup long enough for it to work? Most people will never admit this because it feels like weakness, but admitting it is the first step to breaking the loop. The only way to stop losing right before the move is to stop reacting to pain as proof. Pain is just pressure. The question is, can you sit through it without interpreting it as failure? The irony is, the moment you stop fearing being wrong, you start being right more often, because your decisions finally align with logic, not emotion. The market becomes quieter, calmer. The same candles that once terrified you now look like opportunities. The fake-outs you used to fall for now appear as setups. The difference isn't that the market changed, you did. But don't mistake emotional mastery for apathy. You still feel everything, the frustration, the doubt, the adrenaline. The difference is, you stop obeying it. You let those emotions exist without letting them decide for you. That's what separates the consistent from the reactive. The consistent trader doesn't avoid discomfort, they outlast it. If you can truly internalize this, that your losses before the move aren't proof of failure, but proof of timing immaturity, you'll start to shift. You'll stop focusing on being right now and start focusing on being right eventually. And that shift, though invisible on the chart, is everything. Because once you stop reacting to every minor fluctuation, the market finally stops using you as liquidity. It stops needing your stop loss as fuel. It moves with you instead of against you. That's the moment you stop being the prey and start becoming the observer. But even when you understand all of this intellectually, it's still excruciating to live through it. Because knowing you're being manipulated doesn't stop the feeling of loss when your trade dips into red. The market doesn't just take your money, it takes your confidence first. That's the real transaction happening every day. Every premature stop-out chips away at your trust in yourself, until you start second-guessing every decision. That's how you begin to spiral, from trusting your analysis to outsourcing your conviction to other people's opinions, indicators, or signals. You start chasing comfort, not clarity. And comfort is the fastest way to poverty in this game. See, your real battle isn't against volatility, it's against emotional impatience. You want the market to validate your decision quickly because you've tied your self-worth to outcomes. You're not just losing money, you're losing identity. When the market goes against you, it doesn't just hurt your wallet, it hurts your narrative. The idea that you're capable, that you're learning, that you know what you're doing. But here's the paradox. The market can't reward you until it destroys that narrative. It needs to kill your ego before it can teach you truth. And that's why you keep losing right before the move. Because you're still reacting to ego pain, not price logic. The greatest traders aren't fearless, they're emotionally fluent. They feel the same fear and frustration you do, but they've learned to label it differently. To them, fear means, we're entering opportunity. Discomfort means liquidity is forming. Uncertainty means, it's time to observe, not react. That internal translation, that's the edge. Because while the average trader is trying to avoid pain, the professional uses it as a compass. They know the market often moves in the direction that hurts the most people. That's why the best setups never feel good. The breakout that feels safest is usually the trap. The dip that feels terrifying is often the launch pad. It's inverted logic. The market rewards those who can act against their instincts. But you can't do that until you stop believing every emotional impulse as truth. The voice in your head saying you're about to lose again isn't analysis. It's trauma. It's the echo of every stop-out you didn't understand. And until you separate pain from evidence, you'll keep repeating the cycle. Every losing trade before the move is your nervous system begging for closure. It hates uncertainty. It wants to turn open loops into answers, so it convinces you that closing early equals safety. But in trading, closure is often just disguised regret. You close to feel control, but that control is fake. Because as soon as price goes your way again, you're right back in emotional debt, replaying the loss mentally. The only way out is to stop closing trades for emotional reasons altogether. Only exit when the reason you entered no longer exists. That's the foundation of how pros survive the fakeouts. They don't think in terms of winning or losing. They think in terms of valid or invalid. That shift detaches them from the roller coaster. Because when your trade thesis is invalid, you're no longer losing, you're just reallocating capital. But when it's still valid and you exit anyway, you're not managing risk, you're feeding fear. You might not realize it yet, but every stop loss that gets hit right before the market moves your way was teaching you this. You're defining risk too emotionally. You're placing stops not where they're structurally logical, but where you can tolerate pain the least. And because your threshold is predictable, the market keeps exploiting it. If your stop is exactly where it feels safe, that's probably where it shouldn't be. The market rewards those who can place stops in zones that feel terrifying to others, because those zones are beyond the herd's pain threshold. And if you can mentally survive that discomfort, you're already ahead of 90% of traders. But this requires something that sounds boring and unglamorous: emotional conditioning. You can't fix this by watching more tutorials or tweaking your indicators. You have to reprogram your nervous system. You have to practice sitting through the red. Practice not checking your phone every 2 minutes. Practice feeling that urge to close and still staying put. Every moment you do that, you're training your brain to tolerate uncertainty, and that tolerance compounds faster than any interest rate in the market. Here's the crazy thing. The market doesn't actually care if you're right or wrong. It only cares if you can stay in long enough for probability to express itself. The reason you lose before the move isn't because you're unlucky. It's because you've given up the one edge that truly matters: endurance. The longer you can hold your conviction when others can't, the more money you'll make from their surrender. And their surrender is predictable, because everyone's emotional wiring is built the same. The difference is how many times you've trained yours not to react. When you understand this, you stop chasing entries and start studying behavior. You stop asking, "Where should I buy?" and start asking, "Who's about to panic here?" Because the market doesn't move because of your analysis, it moves because of mass emotional liquidation. And once you can see that pattern play out enough times, you start realizing something unsettling. Every candle, every wick, every fake breakout, it's all just emotion printed in price form. It's a battlefield of impatience, and the only weapon that works is stillness. Stillness is not inaction. It's controlled awareness. It's the ability to feel pressure without obeying it. When you master that, you stop getting hunted. You stop being the liquidity. You stop feeding the very system that thrives on your fear. You become the quiet one, the person who doesn't flinch when everyone else is flinching, the one who seems lucky but is just emotionally trained. And that's when trading becomes strangely peaceful. You realize that losing money before the move was never a curse, it was initiation. The market wasn't punishing you, it was preparing you. Because until you learn to handle the pressure of being right too soon, you'll never survive being right long enough. The irony is, once you stop fearing that moment when the market moves against you, it loses its power over you completely. You start to see every shakeout not as a betrayal, but as a ritual. The market must purge the weak before it rewards the strong, and your only real task is to not volunteer for the purge. That's what most traders never learn. They think survival comes from tighter control, quicker reactions, or better indicators. But in truth, it comes from restraint, from not doing what your biology screams at you to do. This is why trading feels like a paradox. The less you do, the more you gain. The quieter you get, the louder the market speaks. Because when your emotions stop interfering, you finally see what's actually happening. Waves of panic and greed looping endlessly, just wearing different faces every time. It's almost mechanical. Once you stop being emotionally attached, you start noticing how predictable human behavior really is. It's always the same pattern: enthusiasm, hesitation, fear, capitulation, then clarity. Over and over again. You've been caught in that loop for months, maybe years, not because you're bad at analysis, but because you never learned to detach from the rhythm of mass emotion. You can't outperform the market until you stop trying to emotionally synchronize with it. You have to desynchronize. The herd moves together because it feels right to move together. That's why it loses. When the crowd gets scared, it sells together. When it gets greedy, it buys together. That collective synchronization creates the liquidity that the market feeds on. Every time you've been stopped out right before the move, you've been moving in sync with everyone else. And the market needed that to happen before it could go anywhere. That's why professionals seem emotionless. They're not robots. They're observers. They've accepted that pain isn't avoidable. It's required. That's what gives them clarity. When price whipsaws, they don't feel betrayed. They see structure forming. When others are screaming about manipulation, they see liquidity engineering. They don't take it personally because they understand that the market isn't designed to hurt them, it's designed to reveal them. Every reaction you have is information. Every fear is a data point. The more aware you become of that, the less emotional noise there is between you and the truth. Here's a thought that might sting. If you keep losing right before the move, maybe the problem isn't your system, maybe it's your threshold for boredom. The best trades often begin in boredom and end in chaos. But most traders can't stand boredom. They crave stimulation. They want action, movement, confirmation. And that craving makes them predictable. You've probably seen it in yourself. You enter too early because you're tired of waiting. You exit too soon because you're tired of holding. Boredom kills more traders than volatility ever will. Because boredom creates emotional restlessness, and restlessness is what the market feeds on. You know what separates consistent traders from everyone else? They treat waiting as a skill, not a void. They understand that most of their job is sitting, not trading. They know that every fake-out, every false start, every manipulated wick is just the market asking one question: can you wait longer than the average person? And most can't. That's why the average loses. The market doesn't punish ignorance, it punishes impatience. And this patience is not passive, it's active observation. It's learning to see through the noise, watching how others will behave, sensing when emotion is peaking. When you reach that level, you stop asking, when will it move? And start asking, who's about to give up? Because that's the signal. The moment the crowd gives up, the move begins. The market doesn't care about your technicals, it cares about the density of despair. There's this hidden moment before every big move. You've probably felt it dozens of times without realizing. It's when you start doubting everything. When your analysis looks weaker, your conviction thinner, your confidence fractured. That's the moment you're being tested. Not by price, but by pressure. The market doesn't need to drop another 20 pips to make you fold. It just needs to hold in uncertainty long enough. Because it knows humans crave relief more than reward. And that's the real currency it trades in, your craving for relief. You've been taught to avoid discomfort your whole life. But in trading, that instinct betrays you. Here, discomfort is the edge. The place that feels most wrong is often the place where the move begins. Because by the time something feels right, it's already crowded. Every great trade starts with doubt, not confidence. The market is built to reward those who can act while uncomfortable and sit while others scramble. That's why your biggest frustration, losing before the move, is also your biggest teacher. It's showing you exactly where your emotional boundaries lie. But here's the part few will tell you. Once you transcend this stage, your relationship with losing changes forever. You stop seeing losses as setbacks. You start seeing them as the price of participation. Every stop-out becomes an entry fee to deeper understanding. You lose smaller, slower, smarter. Because you realize that the game isn't about avoiding pain, it's about becoming fluent in it. The moment you can watch a trade dip into red and feel nothing but curiosity, you've arrived. Because now, the market can no longer manipulate you, it can only reveal itself. Eventually, the same scenario that used to destroy you, being stopped out before the move, becomes the clearest confirmation of where you should have held. And that clarity accumulates. Over time, you start holding through what used to break you. You start winning in places you once panicked. And when that happens enough times, your whole perspective flips. You no longer see the market as an enemy, you see it as a mirror. Every fake-out, every loss, every almost win, it was all just the market trying to teach you the same lesson. The move doesn't start when you enter. It starts when you stop reacting.